Looking to purchase a 6-unit property, most banks are doing up to 4. How hard is it to lock in a 6 or more unit loan? Also, is it considered commercial? Yes. So it's not going to be hard at all for you to. I think, sometimes banks aren't necessarily known for thinking outside of the box. And if you call into a bank and use the wrong words, then you're going to get the wrong answer. Right. So I think knowing what it is that you're asking for is half the battle with these banks. You're correct. 1 to 4 units is residential. So if you've got a 4-unit property, you can get a normal home loan on it. If want a fantastic strategy of purchasing homes is buying a 4-unit, living in one of the units. That way you're qualified for a normal homeowner loan and you get the rental income from the other 3 units. So I think that is something that pretty much all first-time home buyers should do, because you pretty much get to live for free while you are collecting, the rents of 3 units. And usually, just because the quantity of 4 units, the expenses that you're going to incur in owning that property are never going to be as great as the rent you are collecting from the other 3. So it's a fantastic strategy that everyone should consider, especially when they're younger, before they have big families that might not be appreciative of living inside of a 4-unit. So do that strategy if you're able to, because 1 to 4 unit is considered a residential kind of normal homeowner loan. So anything that's true for buying a single family house for you and your family to live in would also be true for buying a duplex, a 3-unit, and a 4-unit. However, as soon as you cross that 4 threshold, as soon as you start venturing into the 5-unit and greater, you're now in the commercial loan space. So what I imagine, and from just hearing the frustrations of trying to get banks to finance things or give you, quotes on, what a loan package would look like, multiple times people with like a 5 or 6 unit under contract are calling the Fannie Freddie lenders that pretty much only do residential mortgages, and they're asking for this commercial loan and not getting a good explanation as to why they can't do it or what they should do next in order to actually get a loan on that property. If you are buying a property that's 5 units or more, you need to only talk to commercial lenders. Now, I would say as far as commercial lenders go, this is when the area starts getting really gray, right? So when you're talking about 1 to 4 units, you're talking about most banks packaging loans to Fannie Freddie. They have really tight guidelines. They spit out some really cookie cutter products. So you talk to 20 different banks that plan on selling the loan to Fannie Freddie after the loan gets originated. You're talking about 20 different banks that are going to go through the exact same line of questioning, have the exact same product, and maybe they might have a little bit of a rate change or rate difference between them, but for the most part, it's going to be the exact same product. That is not true on the commercial space. The kind of the handcuffs come off. It really becomes up to the local bank. And one of my favorite things to say is, he who has the gold makes the rules. So when it comes to commercial loans, a lot of, especially your regional or local banks, are going to keep these in their portfolio. They're never going to attempt to resell them. So it's really up to them what they're comfortable with and what they're willing to lend the money on and what they aren't. So you call 10 different banks about a commercial loan and you could get 10 different requirements, 10 different answers. So, seasoning is one of those things that I think is most evident how this changes. So, some banks want 18 months seasoning. So they want you to own the property for 18 months before they will do some type of cash out refinance. Other banks will do 6 months. And then some banks don't have any seasoning requirements. That, I think, exemplifies what I'm saying. When local banks, credit unions, they kind of get to make their own rules. Regional banks do. Now, as soon as you start getting into the larger banks, they're going to have that same kind of cookie cutter approach to their line of questioning what they are interested in doing, what they aren't, just because they're trying to scale these loans. They have their own appetite. They've created, packages and loan products for specific types of businesses, packaged in certain ways where they're able to mitigate their risk. So I would not recommend going out to a large bank like Bank of America and asking for a commercial loan, on a 6-unit property. So I would hone in on regional banks. Pretty much the smaller, the better. I would say if you can call a bank and and ask about this commercial loan, and then you get transferred to the vice president, the VP of commercial lending, then you're probably in the right spot. So anytime you're like one phone call away from the vice president of commercial lending, I think you're in the right spot. I think you should try to find 4 or 5 of those type of banks and figure out who's going to offer you the best product between those 4. Now, one thing that I also see a lot of people do wrong is once you make the appropriate connections with these banks, then if they turn you down, figure out why they're going to turn you down. Because the chances are, if you buy this 1/6 unit and it goes well, you're not going to stop there. You're going to want to buy another 6 unit. And, one of the things that we kind of honed into early on is, different banks like to see financials presented to them in different ways. You really are able to hone in and learn on like what is important to a bank. So at this point, we might have 15, 20 banks that we work with, and we have a very good understanding of their appetite, how they like to see things presented. So when we find a deal that might be a good fit for that lender, we already know how to package it and present it to them for consideration and approval. So I would recommend that you take notes, that you figure out what banks are looking for, what they like to see, what they want to lend on. And then you, as someone that would love to utilize their funds, go out and find deals that would fit into their appetite really well. So I think a lot of investors, they get their picture of what real estate investing looks like in their head, and then they try to shove these square real estate deals into the round hole of the lender, and it just doesn't work well, or whatever that saying is that I probably just botched. So if possible, it's always better to figure out what the banks want and adjust your business model accordingly while still investing in real estate. I would say that's the winning strategy, because if you go out and you have this one deal that you find that you think is great and you want to find hundreds of those, but there's no bank that's willing to lend to you on those types of deals, well, you're in for a very strong uphill battle. However, if you figure out what banks want and then go out and find deals that they like, well, you're never going to have any trouble finding financing for those deals that one bank likes until they reach their threshold of how much money they can give you at one time.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.